What you see right now is not, these are not recommendations for stocks, guys. This is not a recommendation to buy or sell stocks. This is just me putting together what I'm doing for my watch list, what I'm doing for my personal portfolio tracker, and what I'm doing as far as how I pay attention to cycles. I just thought it would be helpful for you guys to see what I'm thinking before it actually happens. So the way to really position yourself to outperform the market is you buy. You ever hear somebody say, "You're so lucky"? Well, luck is what happens when preparation meets opportunity. And that is exactly what we have now. Let's get into it. Welcome back, YouTube. If you are not subscribed to the channel, well, I don't know what to tell you, but we have an opportunity here. In my opinion, I think this is a great opportunity to invest. And if you've been following my channel, you know, I've basically been 100% cash since December, and I've been creating a platform here that is free to use. And the whole mission of this channel is to screw Wall Street and screw those individuals charging for courses, and to empower you, the viewer. So what you have in front of you right now is something that I need to work on a little bit here, but I wanted to get it out so you guys can start scrolling around and using it. As you all know, one of the indicators to me that we were at the end of a business cycle was some of the outperformers in the stock market was the technical breakdown and the fact that we had interest rates on the rise and we had high inflation and political tensions. To me, that is an end of a cycle, and it was an end of a bull market. So where do you want to be invested at the end of a bull market? Well, as we can see here, there's highlighted healthcare, staples, and utilities. And that is spot on to where about I think you need to be allocated. And you probably should have been allocated, you probably should have started been allocating to these positions back in December. When we think about, you know, now Coca-Cola is trading for a higher PE ratio than Apple. And we think about some of the healthcare companies that have really run up over the last year. It's just, you're kind of late to this one. There might be some opportunities in some utilities. You could also buy the indexes, guys. Now, that's what I recommend doing. I recommend buying the indexes. So one solid index, whether that's VT, VOO, SPY, and you layer it in with a heavier amount of the cycle that we're currently in. So I would maybe do, you know, I would do some VOO, layering it in with healthcare and consumer staples. And then I would buy probably 5 to 10 individual stocks, companies like Coca-Cola and some of your growth companies that you might want to own for the long term that you don't care what the price is, but you want to own them. That is how you beat the market, guys. But you have to understand what part of the cycle you're in. And so when we go heavy healthcare and we go heavy utilities, we need to rotate those when they start getting really expensive, go back to cash, sit back, see what's going on with the overall economy, see if we're heading back into expansion phase or the growth phase of the economy. And that way there you can get ahead of it, and then you could start buying some financials, some tech, some technology, and some consumer discretion, right? As we see now, consumer discretion is kind of all over the place. We have, you know, the high-end consumer is still pretty strong, but the low-end consumer seems to be hurting. And so that's where we know the divergence is coming in. You don't even play that game, guys. You stick with the healthcare, you stick with the staples, you stick with the utilities, and you stick with the energy. So we got energy kind of, we got energy in the late cycle here, but because inflation's so high, you could have held energy throughout that cycle. So, and I think when you're owning the index, you would see that, okay, energy prices are just keep going up. I don't want to get rid of my energy quite yet. But once we start getting $140, $150 a barrel and energy starts skyrocketing, that might be the time to let that sector go. The other thing I want you guys to take a look at is, so if you think we are at a market bottom, then you want to start adding to the financials. You want to start adding to the consumer cyclicals, which would be consumer discretionary. You want to start adding to the technology, as we stated before, and you actually might want to start adding to growth, guys. Okay, this is where you want to add some growth as well. So growth is not listed in here, but you might want to add to some growth at this part of the cycle as well. So this is free to use, guys, okay? Along with this, you also have a watch list tab that I'm working on here. Or these are some of the most popular companies within the stock market. And so I'm just using this as a jump off point. I'm gonna be rotating stocks in and out of this. And what you can see here is what I think you should be paying for the stock, what I think fair market value is in this type of tightening process here. As you can see down at the bottom, if you guys are following the channel, MPW to me was a good buy, but I had to lower the price as they do have international exposure, which is going to mess up the exchange rate, which could affect their bottom line as well. And then on this one, guys, I'm probably going to change these around a little bit here. As I'm probably going to do a passive portfolio versus an active portfolio. Passive portfolio would be being overweight a couple different stocks, but really overweight certain indexes. That way there you set it and you forget it. You're not even worried about what you're doing. And the active portfolio is probably going to be a little bit more layered to what's going on as far as business cycles go. And then lastly, guys, we have a portfolio tracker, which when I start buying stocks, I will make it public and you can see my outperformance. I do own a few stocks right now, which I have to update and put in here, but you guys will be able to have access to kind of what my mindset is and what I'm thinking as far as what to buy in this type of economy, in this type of business cycle. So I think this is a helpful tool for a lot of people, especially the cycle analysis. I think a lot of people might find interesting the cycle analysis. If you go to the cycle analysis and you break it down and actually see what stocks are outperforming today, you'll actually see that this makes a lot of sense and why I've been calling for a top of a market and possible recession. A lot of the outperformers have been a signal to me of what could be coming here. So take a look at that, guys. If you find it helpful, all I ask is that you give me a thumbs up. Hope you guys find some value in this. It will be updating every day. So as always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.